5.
Hi folks, good afternoon. How are you doing this Wednesday afternoon? Well, if you're a bull, I'm guessing your spirits might be a little lower down looking at the way the market's sliding off. Well, worry not. We are here to fire up your imagination, electrify your spirits. Yeah, you get the drift. I'll stop with the cliches and the puns right now. Hello and welcome to this edition of Who Moved the Market. I'm Surabhi Upadhyay, and helping us with the moves today is Vivek Iyer. Vivek, thank you very much and welcome to our special digital live.
Thank you so much for having me here, sir. We look forward to this particular discussion and hope we can get some more insights into the power sector and what's been happening in the last couple of days.
Yeah, I'm going to grill you like quite well now the next 10 minutes. So basically, to tell you why we're talking about the power sector today, it's the heat. Yes, it's the heat outside that's caught all the headlines in the last 24 hours, and not just the headlines. This heat and these abnormal temperatures that we're seeing in the north part of India and western India, it's actually made the government move and take what we can perhaps call a preemptive strike. So just to set the context, what the government has essentially done is that it has invoked Section 11, right?
That's right. Section
11 of the Electricity Act. Vivek will help us understand what this really does. Basically, what we're saying is that now the thermal coal producers in India, the power plants that rely on coal to produce power, they have been directed that in case these power plants rely on imported coal, then they need to ensure they import enough coal and fire up their plants to run at 100% capacity. Is that right, Vivek?
Well, that's the aim. The main aim, of course, as we discussed, the main aim is to ensure uninterrupted power supply. So that is where the government is coming from. So what's happened this year is that on the back of rising temperatures, on the back of anticipated demand, which is expected to be the highest ever. So what the government said in its notification yesterday was that they're actually expecting peak demand to go up to 229 gigawatts by April 2023. So therein lies the worry that will power companies have enough coal to go ahead and produce thermal power. Now remember, despite in terms of capacity,
before you get to the capacity, I just want to, there's some interesting trivia because I was doing some sort of reading up on this as well. You mentioned 229, right?
That's right.
So when we say peak power demand, this is a single day peak demand which this year is expected to hit 229 gigawatts.
That's
what was the peak last year? It was in April actually, not in May, but it actually 26th of April last year, where the peak demand was 201 gigawatts. Vivek, guess where we are at already in February? We're at 205 as of yesterday.
And it's February.
It's February and the real scorching summer hasn't even begun.
Exactly.
So I mean, we need to understand how this is going to happen. Basically, will the lights remain on is the question.
So that's what the government has done. What they've actually done is they've preempted a shortage of supply as far as coal is concerned for thermal coal-fired power plants. Now, just to give a little bit of perspective, in terms of capacity, fossil fuels that mainly comprising of coal comprises around 57 to 58% of the total capacity. However, in terms of the actual supply, thermal coal is almost 75% and it helps meet India's power needs. So which is why the
75% of India's power needs still being met by thermal coal. While we discuss the go green, that's obviously a transition process. So coal is important and that's where we're coming from.
Especially so in the last couple of years, given energy security has become such a big issue.
And then you have all the reports of, critical power coal supply at power plants down to 5 days of stock and 3 days of stock, all of that.
Exactly. This is exactly what the government is trying to prevent. And so what the government has done is the government has said all of the coal-based power plants now have, they've been given the mandate, you can go ahead and import coal from outside. And why was it not viable earlier? And why weren't they doing it already? Is because imported coal generally comes at a higher cost. And if companies are unable to pass through those extra costs, what happens is it becomes unviable for them to go ahead and operate these plants. So now the government has said all of the imported coal that you do import, we will allow you to operate it at higher capacity and also allow you the cost pass through. So complete cost pass through is what the government has mandated thermal power companies to go ahead and give.
So this is the important bit, and Vivek, do jog our memory that and we've come a long distance from the times of I think it was 5-6 years ago, when the same power plants, we're talking about Tata Power or Adani Power's Mundra power plant,
The best example, actually.
Probably the best example, right? Because these guys were importing coal from Indonesia, which for other reasons, basically that coal became really expensive, and the plants had become so unviable that they wanted to sell off the plants for
They
what?
wanted to get rid of it.
For 1 rupee. I remember that time.
Yes, I think so.
So this is a very positive coming back from that era where these assets were totally unviable, right?
Absolutely right. So, the best example is Mundra power plants. So Tata Power has the power plant there, all 5 power plants actually, and Adani Power 2 has a power plant there. So what actually happened was that, just to give a little bit of context, while the plants were set up, they always wanted to import coal from Indonesia, and they wanted to ensure that PPAs, long-term PPAs were signed with various state governments to ensure uninterrupted power supply. However, due to certain events that was beyond the control of the companies, coal that was being imported from Indonesia became unviable, and price hikes weren't allowed to be taken. So the companies were left with an asset which did not have PPAs and which had unviable coal supplies. So this particular development, Section 11, almost an emergency measures that the company has done, it does have a past precedence. In terms that we did it last year. So from April to December of 2022, Tata Power actually supplied power from the Mundra plant to various states, and they were allowed a complete cost pass through, and there was a one-time profitability positive impact on the company's financials.
That's a really important point, and I think that's what's changed, right? That's the biggest change. So help us remember what happened with this experiment last year. Was this really viable? And some of these coal power producers, imported coal producers, did they manage to generate some profit, or at least were the losses limited from these assets?
Number one, losses were limited. Number one, losses were cut down. Tata Power, now actually when you talk about Tata Power, the dynamics work a little differently, because Tata Power also has a coal trading arm, and it actually produces coal. So, dynamics change, and the company doesn't really report the segmented financials where it
the standalone generation entity.
Exactly. So you don't really know, how much profits they made from the coal trading business and how much profit. But despite that, analysts that we spoke to are quite confident that yes, the company did, from April to December of 2022, did get a positive impact on their financials because of being able to supply power from Mundra power plant.
That explains why Mr. Pravir Sinha was sounding very optimistic. We had an interview with him today on the channel on CNBC-TV18 in the morning, and he struck a pretty optimistic note, saying this is a welcome step, and he also reiterated this is a cost pass through. That's the important phrase here. So what's the view? I guess now with the cost part being taken care of, from a company or stock perspective, this should be seen as a positive development?
So let's have a look at the power sector and the stocks. So for the power sector, it is extremely positive, simply because demand is expected to rise. So all of the plants which are now operating at PLFs between 50 to 60%, and India thermal PLFs have been historically quite low. So when demand goes higher, PLFs go higher. However, PLFs, in the last couple of years weren't really going higher because of the lack of coal or lack of availability of coal.
How do you fire up your plants when there's no coal?
Absolutely. With no raw material, there's no finished product. Exactly. So because of higher availability of coal, so last year what happened? First quarter, NTPC that was operating at a PLF or a plant load factor of 70% actually saw it rise up to 80%. So similarly, you're going to see there's going to be a price hike across the entire power supply chain. And not only that, even exchanges like IEX. So the government has said, in case you generate excess power, you will be able to sell it on the exchanges. And just to give a little bit of perspective, especially regarding IEX, what happened in IEX towards the end of last year was, because power prices were low, sellers did not find it incentivizing enough
to sell on the exchange.
Exactly, and which is why volumes drop, and which is why IEX has been struggling a little bit. There's been other factors too, on the back of increased competition, 2 new exchanges have come in. But the basic fact has been, sellers weren't incentivized enough. So IEX2 yesterday did see a bit of a perk up in the session on the back of the fact that they're now going to see higher volumes or likely to see higher volumes.
Okay, now before we wrap this, we've discussed what it means for the companies and the stocks. And now I want to talk about what it means for us, because at the end of the day, cost pass through is great from a stock perspective, from a market perspective, but this will also mean at the end of the day, higher costs for power procurement for DISCOMs and DISCOMs distribution companies, and then these distribution companies will pass it on in the bill, your bill and my bill, right?
So this has been the perennial problem as far as the power sector in India is concerned, right? So state electricity boards or discoms, have been grappling with very high dues that they owe to the power producers or the IPPs, the independent power producers. So eventually, most of the power companies have been saying that number one, allows to hike tariffs even if for a temporary period. Number two, bring a greater ambit of power consumers under the power bill, or people who need to pay the bill. So right now, even at this moment, there are quite a few sections of society that get free electricity. So that, those are the two aspects that need to be covered. But yes, there could be an impact where you would see a slight
rise in your bill. So be ready to pay for that AC on the whole night.
Absolutely.
Just, a word. I was trying to pick on all the positives here. So there's a CRISIL note. It all will depend on the cost of the imported coal, right? If coal prices shoot through the roof, then this will be a problem over the next couple of months. CRISIL, however, is saying that in the next half, the new financial year that will begin, at least in the first half, they're saying there should be a 33% drop in prices of coal over first half of last year. The previous year, they're expecting levels of around 7,100 million metric tons per metric ton. But whether this plays out or not, we'll have to see.
I think Praveer Sinha also mentioned that in his interview today.
He said that coal prices are moving down.
Dollars a ton to around
$200 a ton.
Where he's anticipating prices to come and settle.
Really hope. Now, for your sake and mine, and of course, whoever's interested, and for staying cool, lower coal prices will really hold the key, and we really hope that at least happens. Okay, Vivek, a great chat. But before we sign up, I just want to get your overall sense. You talk to so many people on the street every day. These stocks, power stocks, some of them at least have had a very good last 1 year. In a year when the market was struggling, it was directionless. NTPC, NHPC, these stocks went up 25% to 30-35% in some cases.
Absolutely.
So this is one big change which I can already see. It's a change in thinking and psychology from the government standpoint. What else? What are the other triggers that we should watch out for in this
One
space?
very big change has been, the government has cracked the whip as far as discoms are concerned. So now there are penalties in place if, payments are not paid on time. That in itself has led to a re-rating as far as valuation multiples are concerned. So number one, that has happened. Number two, you're talking about power demand going higher, PLFs trending higher. A lot of other changes have happened. A lot of these companies have actually done various stake sales. They've done monetization. Some InvITs have come out. A lot of developments have happened. And also remember, these companies have and give a very high dividend yield. So when equity markets are very choppy, these stocks begin to look very attractive. So that is another reason. So we spoke to Harshvardhan Dole of IFL, one of India's finest power analysts, and he said even at current levels, names like NTPC, Power Grid, NHPC are expected to do well in the coming year.
Okay, let me see if we have any immediate queries coming in. I think Rahul had written in a while back. I saw one question where there was this one viewer basically asking whether this can sustain, whether it's a flash in the pan kind of a move in power stocks or whether it will sustain. I mean, we're not here to give you stock calls. That's not what we do. But basically some perspective and some background. So given everything that you said, is the general sense on the street within the analyst community as well a little more optimistic on power now?
Absolutely. So one way to look at it is, the growth year on year of power demand. And, that grows in line or slightly higher to the GDP growth of the country itself. So, that is one way you can look at it. Number two, actual changes being made on ground in terms of, discoms getting, a slight nudge, asking them to go ahead and pay dues. So that's another big development. And number two, valuation multiples of most, PSU companies, PSU utilities have changed and improve for the better. So that is another big trigger that we can look at, especially within the listed universe.
Okay, sounds good, Vivek. Thank you very much for explaining all these nuances of a really complicated sector to us. And I think now we have we have a little more idea about how our power bill is going to look, and also for investors, how you should be looking at power stocks in case that's a segment that is of interest to you. So we have it all now electrified and powered up in this update.
Thank you so much for having me. It was a pleasure.
All right, folks. Thanks very much. Remember, you can keep sending us your feedback. If there are specific sectors you want to talk about, some interesting themes you want to pick up in the market, we will pick up that conversation and be here every day at 2 p.m. live on CNBC TV 18 News. That's it for now.